Shout out to the VIP. It's London. Hope you're all doing well. I decided to stream tonight. Let's go over a few issues in terms of Bitcoin, in terms of Tesla. The market's got a little bit rocked today. Bitcoin held pretty well. Let me make sure that all of our VIP are in the house. Hope you're doing well. Guys, former hedge fund owner, private, non-SEC, not financial advice. We'll go through some issues tonight dealing with exposure. All right, I want to deal with exposure. Bloomberg brought up today on their article, in terms of on their website rather, an article dealing with people starting to unload their pocket trades, okay? In terms of what their carry trades are, their pocket trades. I want to go over what that means. I want to go over a few issues that I've dealt with in terms of exposure to the markets at higher levels, long, versus exposure to the markets at lower levels. Let's see what we got here. And I believe, Venus, you are kind of out of town, this and that. Prayers with whatever you got going on. I think you have some travels planned out. J-Mac, I know you're in the back. What's going on? If it's just us two for now, that's great. Let anyone else catch it. I think Leon's probably snoozing in Scotland. If you're VIP and you're not plugged in, just for the record, hit the link in the description. Get in touch with me via the DM on the Twitter, okay? Get in touch with me if you're VIP and you're not plugged into our Slack, to our private DMs in the back, etc. Hit that link for Twitter at the very bottom. Get to me and DM me, and I'll get in touch with you. Hope you're all doing well. In terms of where we're at, I brought a video to the back, and shout out to you guys. Hopefully the audio, everything is okay. Let me know if there's any problems with the audio. Yeah, it looks like it's working okay. The situation I want to go over very quickly that we're in right now. Let's talk about where we are right now, okay? Let's differentiate what a pocket trade is. What is a pocket trade, right? What's a carry trade? What are levels of exposure, as I've discussed with you? What are levels of exposure that I would recommend, the market's gonna recommend, guys, top players, aside from me, check it if you would please, but that you are more heavily exposed at lower levels, right? Your carry trade is more heavily exposed, never overexposed, not leveraging the house, the wife, the kids, the dogs, don't trade in, especially the dog, keep the dog, right? But you know what I mean? It's not, you're never going to be overexposed, but in terms of the relative nature of what you're carrying with you versus where you're at now. And if you're not positioned ideally right now in the markets to deal with a little bit of risk towards the top, I want to talk about that, okay? What can you do next time to make sure that you're better positioned in the markets to obey some of these principles that will make things a lot easier, okay, in terms of your risk, right? If you didn't get it right this time, if you get it right next time, beautiful. I'm telling you, if you get it right next time in terms of your level of exposure, is the reason I'm talking about this. If it applies or doesn't apply, it may be annoying to go over if you're not prepared, or if you didn't prepare properly or you didn't execute properly now. But if you do execute this properly the next time, you will be sitting pretty, guys, okay? This is not something you typically will hear about or is discussed at all, okay? If and when you can get your exposure levels down appropriately, and it's difficult because right now, if you're not properly arranged, pre-positioned well, it seems like you're in a frustrated capacity and you're being forced to overtrade now, right, in terms of your exposure in the markets. And I want to just talk about the buy low, sell high principle. Fine, okay. But heavier exposure at lower levels. The further you go down and on principle or primary trades, heavier exposure, relatively speaking. Still never overexposed. Last thing I want to see anyone do is get hurt. Get past the, I'm not getting hurt in the market, I'm profitable in the market, good stuff, okay? But getting past that, it's heavier exposure at the lower levels. And then as we're chopping along and less profit, let's say less, I don't want to get into that issue. In terms of lower probability trades, lower probability instances with some degree of a mixed confirmation. Look at, for instance, let's just go through this. And I just sent this to VIP in the back. But this was an issue. I don't know if you guys can hear this or not.
Move to the upside. I let you know, bulls, it was time to roll. We have an update on Bitcoin, also on Tesla. Tesla's in a bull flag. This is London. Our traders are doing incredibly well. Flag. This on Tesla. Tesla's in a bull flag. This Tesla.
Okay, now, this is just an example. This is an opportunity. This has recreated itself on multiple other coins. I'm not bringing it up to drive the point home other than the fact that we achieved over target here. And when I'm referring to heavier underlying levels of exposure, compared to what? Okay, compared to right now, we can look at Bitcoin, we can look at any asset that we would trade right now. The issue is this: on a fundamental, let's say, primary pattern that, you know, as I were to say here, and I'm just going through this so you can internalize this and you can recognize this type of an opportunity, because it will present itself to you again, okay, in short order, in fashion, well enough that you won't have to wait for, let's say, another 10 years for Tesla to do this, maybe, in terms of the trajectory. We almost went, there's some weird things happening in the market. The Dow literally almost broke a record. It was on the cusp of breaking a record that's been in place since 1890, right? Was it 1890 or 7? I'm gonna have to look at, I think it was 1890. I'll check that. I heard that in passing, and it didn't break it, or it did break it. So it's 100 plus years, guys, in terms of the Dow, the number of days consecutively that it went up. Tesla on this pattern, just consecutive days, it set a record for Tesla. So as we're looking at some record-breaking opportunities here, the point is this: primary pattern, okay? Primary pattern. When I say
Tesla's getting a bull flag. This is London. Our traders are doing incredibly well. We're excited that you're here. Is it on Tesla? These patterns only come along once a year, twice a year.
Okay, just listen to what I said here. It's not just filler conversation I want you guys to pick up on.
Come along once a year, twice a year.
These patterns only come along once a year, twice a year. These primary patterns that we're looking at. Now, we got this on Tesla. You also had this on various other assets, which just started to kind of repeat this, okay? In terms of nearly the same exact pattern framework, there are opportunities for a relatively heavier entry at a lower level that may not get revisited, right? That may not have a throwback. If it does have a throwback within the first, let's say the up and out that it gets within a short order, maybe an opportunity to hit back into it, right? You can obviously trade that, but if that never gets revisited, like if we were to look at it, I'm using Tesla, we can use Bitcoin. I don't want to sit here and just talk about Tesla. We can talk about Bitcoin, for instance. If your, and we had, Bitcoin bottom was rough, okay? And one thing we don't want to do right now, what do we not want to do? We don't want to fall into the trap of what you guys are seeing everywhere, of the guy who's been, was it the boy who cried wolf or whatnot? These guys have been crying wolf every single day. It's just gotten to the point, it's just like miserable to be a part of anything that the guys who want to scare you into selling something, or it's gonna drop, right? It's gonna drop. You know, it's the broken clock is right twice a day. It's just, that's the dynamic you see, and it's gotten to the point, and I know you all know, it's like, it's pitiful. You know, it gets to the point, it's pitiful. You have to be able to trade and engage your patterns. While we're in, and particularly right now, I wanted to bring this up to you because we're in, Bitcoin is not happy. You guys just know, between the levels that we're looking at, as we're looking at primary levels of exposure, right? I can dice down through the candle wicks, and this is a much different scenario. As you were to look at your levels of exposure, as you were to look at what we got. Hey, Venus, what's going on? Thank you for live streaming. Welcome. Always, Venus, always welcome, without a doubt. I'm excited. Guys, it is such a relief to be trading with you guys. It's awesome. We have a great group. I don't necessarily, Venus and I talk about this, do I necessarily want more people in the group? I don't know, guys. We get the edge. We got the edge. Let's keep the edge. Like, honestly, you guys are cool guys and gals, of course. Venus, hope you're doing well. Hope everything's well, you and the family. In terms of the nature that we're in right now, because guys, I get the calls. I'm gonna tell you guys, I get the calls, period, from the guys, or this or that, wanting to know, is it time to go in? Is it heavy? We're going in heavy. Like, man, what are you talking about? Honestly, when people ask me that, I'm like, what are you talking about right now? Like, do you not have any the back of my mind, I'm just like, do you not have any technical composure at all in the markets? I don't mean to be rude, but you have to. You've got to. All the more important if you're playing with heavier money or you want to do well in the markets, you've got to compose yourself technically in the markets. You've got to. And it's just when I see people who aren't composing themselves technically in the markets, and the problem is they'll battle up at me and they'll want to know, well, is this the right time for me to throw in heavy amount? I'm like, oh God. Because what? They want an answer and an excuse. You probably do this on your own time as well in terms of what you're doing. You're getting frustrated. You want a better pattern. And it's just, I'm going to go ahead and lay into this. Like, I may write or I may say, if you listen to me, I promise you'll do better. I went ahead and say it. I promise you'll do better. Challenge me if you want to. I'm fine with that. But in terms of some of these basic things, like with Tesla today, Tesla rocked on the GDP news. We were in the back, we were in the hedge. Bitcoin held strong. Way to go, Bitcoin. But in terms of lower entries, and I know it seems like, well, that's just fine. It's like a lower entry. Well, that would be, that would be, of course that makes sense. But if I'm comparing, let's say, a lower carry trade, and it's relevant to the extent that Bloomberg right now is, Bloomberg is talking about people unloading their carry trades and the effect that that's going to have on the market. Okay. There are a few assets that I would look at, me personally, and I haven't said this to you guys. There are a few assets that I'm personally just lasered in on, okay? It's just due to the trend-like nature, just so that you guys know. Like, I don't see how you cannot trade NVIDIA. I don't see how you cannot trade it, okay? Bottom line. Convert the whole channel over. Everybody, let's just trade NVIDIA. Let's live stream NVIDIA, and that's all we do? No. We love Bitcoin. Bitcoin will surprise everybody. Bitcoin spike, guys, we got that name for a reason. We caught the low in summer of 2021 at 27,850, something like that. Everybody thought it was going down, and we had to be there. But this low right here, boom, we caught that. I can still dig it down to the small pattern. Was it 29,450, 750, whatever it was. So we said, okay, fine, Bitcoin spike, and Bitcoin will just, it'll erase everything else in the market. When it takes the front stage on the news, you guys know it takes the front stage. Everybody's looking at Bitcoin, right? Normally when they want to sell it after people have bought it. But when I'm talking about, for instance, on Tesla, just when I talk about Tesla, if you guys only trade crypto, no big deal, guys. I think that you will trade Tesla in the future. I think that you'll trade NVIDIA in the future. And I just think you will. If it's something a bit foreign, but when it moves, or especially when it's acting as a hedge against Bitcoin, you'll start to see it a little bit more as an opportunity that you'll want to take advantage of, right? And the advantage you want to take, right, is absolutely on these patterns. Boom. And the advantage is something like a stock has, like Tesla, higher liquidity. Everybody on the planet is trading this thing. Everybody's looking at the charts. They're checking the charts. They're checking the volume. The guys who are putting a lot of money into this, they've got teams going over the data and over the volume and over the price charts to make sure, kind of a validation process in terms of the information they're being given on a pattern like this. Yes, there's a financial kind of a due diligence process that goes into some place they're going to put in $100 million or $200 million into Tesla. It's a lot of integration there that we don't necessarily get with our cryptos. So the notion that I wanted to talk about in terms of levels of exposure, okay, and just listen if you're VIP as we talk about this, because it applies to let's say a situation like, let's talk about how that Tesla trade's different than Bitcoin right now. Now, Bitcoin has, if we go through a checklist, right, we want our MACDs, at least, let's say MACD and momentum, we want it at least rounding, right, if not crossing up, two different thresholds you may have. We'd like RSI if we want to get real low. We want confirmation across every time frame. Boom, up through daily, right? Daily hasn't wanted to give us heavily oversold. Is that a checklist? No problem. just look into a catastrophic situation like FTX or Luna, or how low can you go in terms of oversold. So you, ideally, if you're trying to get low, that's you're going to have some strategies around that. We talk about managed futures. We talk about some different issues. This pattern, I can talk about Tesla. We can talk about Solana. Let's talk about Solana. Same pattern popped up on Solana after it popped up on Tesla. Okay, this is what my Solana chart looks like now. But as we were to look at this, this specific opportunity, it literally was just recreated for you within a short amount of time, to where if you missed the Tesla trade, well, look at what Solana had for you. Boom, boom. Now you can appreciate also what Tesla did. I know everybody probably wants to kick themselves. Some not, but that's a heck of a trade. Very nicely done, right? And we had the expectation of rocking up, out, and over based upon some other dynamics that we know are in play, right? Yeah, based upon, if we were to look at this for Tesla, this is just an opportunity. I'll trade this pattern. I'd like it on something that's highly liquid, of course, right? But as you're gauging this entry here, right? And this would be a carry trade right now. You're in a position with a carry trade, literally, right? I encouraged all of you to hammer in and get a level of a hedge, to hedge in and lock your profits in this zone. Also on Bitcoin, right? Encouraged, and to the extent that we're walking through hedge, locking in profits on higher levels of Bitcoin. 32,000 was our level to beat. With some change, we got into 31.8. So just real close. And I don't want to tell you how to, let me go through the principle today that we really latched onto, that really we caught, that helped me relax, okay? Let's go through this. On Tesla today as an example, and let's talk about the variation. Let me finish this thought on Bitcoin. This is the problem with Bitcoin right now. You have got this descending level. Look at this. You've got a descending level. Hit one, hit two, hit three. A perfect, absolutely perfect, right? Broadening top formation now, as if nothing's happened wrong on Bitcoin. You guys see this. What's the problem? Let's flip from the candle wicks with hit one, hit two, and hit three. I always recommend you see this on a big screen TV, guys. Hit one, two, and three. This is one, this is two, this is three here on the wicks. Here, let me take off Fire and Ice for a moment. Hit one, hit two, and hit three here along the top, broadening wedge. No problem. We're still safe. Everything's fine. Except if you go to the lines, and Bitcoin is a master at this. You guys know. We go to the lines, and here we go. And we've got a breakdown from the broadening wedge on the lines. Now, this is not a situation where clarity is going to just, no problem. It's just going to be a clear answer, no problem. Clear is the road for Bitcoin. This is not an opportunity to get in at a heavier potential pivot or primary pattern and just knock the lights out of Bitcoin. Do it if you need to. If you have to, if someone were to have a gun to your head, you might want to still ask them or try and negotiate and be like, well, actually, there is an issue. I know you have a gun to my head. I know I have to put in $1 million right now at Bitcoin, but could we talk about it maybe next week? Just an idea. Could we talk about it next week? The idea is the following, and God forbid anything like that happen. It's a maybe a hyperbole. You guys get the idea? It's what? This is not a situation where the market is trying to impute any type of a clear, no problem, easy as the road, high probability framework to you. High probability case, no problem. It's giving you the exact opposite. It's giving you, and you guys know this, but we need to talk about this, document it to the extent that it affects us in terms of pattern breakdown, preceding level of support, hooked into resistance, boom, okay? We're down and out. We have a downside expectation on the lines. Look at this on the extension. We have a literal expectation of heading down to max probability would be the 50%, all right? An additional 3.29%, or the 100-fold completion down to the 27,574, or 6% to the downside, which would put us in the framework of the 23.6 fib hit. That would be a stronger, right, as we were to look at levels of exposure, and that's the whole idea. And this won't be a very long stream. I told you guys it wouldn't be a very long stream. What's up? Missed this. Some of the test trades these past few days have been Tesla and NVIDIA, where Bitcoin is in a tight range. Yeah, some of Venus's best trades have been Tesla and NVIDIA this week, last few days. Guys, when Bitcoin's stuck and you don't have a nice pattern on something else, you're getting the opportunity to trade on Tesla, on NVIDIA, and the train is going through the station at like Mach 5. It may not seem like that because you just want to focus on Bitcoin, but the literal train is going through the station at Mach 5 on NVIDIA, okay? Now it shot out at light speed with that rewrite on its projections. When it went up 30% in one day, that's unheard of. That's literally unheard of in terms of market capitalization being added. But it's got a ton of liquidity. It's got a ton of day trader interest. Institutional desks all over the place are hammering into this on acquisition basis, on a trading basis, technical trading basis, on to the extent there's some overlap there, different discussion, different day. Acquisition, trading, etc., how that may be built in. Just think of like basic discount levels, right? Basic discount levels, maybe a mutual fund may want to trade a bit, accumulate a bit, long discussion, different discussion. So as we look at the problem with Bitcoin, and we don't need to have a stock trading group. Hey, we're a stock trading group. I mean, you just, for the record, it's like a UFO. I don't know what's going on with those UFOs, right? But it's like, no, it went through the station at Mach 5. The train went through the station at Mach 5. I saw it. That's NVIDIA, all right? That's, unfortunately, I hate the meta chart. On the books, I hate the meta chart. Has nothing to do with Zuckerberg or Facebook or this. I hate the chart. I don't like the chart. I don't want to turn the page in a book and look at the meta chart. Are you kidding me? I don't like it. It's not why. I don't like the staggered nature of the retracement into a straight line pickup. I don't like that in terms of the lack of regard for any of the extension targets to the upside. I at least want to see some regard for a Fibonacci extension placement to the upside, and I'll show you why I don't like this. I want to see some regard. And I don't like it. You guys can trade it. We'll go over some cryptos in a minute. But guys, this is the Mach 5 train that is going through the station. You may not want to trade it. This is Meta, for instance. I don't like Meta. Maybe I'll short it. Maybe I won't. It's not something I want to focus on. So I'm right there with you, right? If you like Meta or not, that's fine. The issue is, this is a Mach 5 train heading through the station. I don't want to ride on it. I don't want to get on that train. It's just my deal. I don't like the chart. I don't like the way that the chart tells me, and we should talk about it to some extent, because I don't like the way that there's just no regard. If I am to take a low to a high here, I don't like that I can't interface with this thing at all in terms of any type of, a little bit of a hitch on the 23.6, small, overdone, back below. A little bit of a hitch on the 38.2. Okay, where's any kind of a respectful level of interaction with any of the technical targets to the upside? Anything. Now, we could take the same approach, because the only time that we see this, if we want to go there, I don't trust the charts on it. Loud and clear. I don't trust the charts on it. I see something like this, big time manipulative, just not, guys, I don't trust the charts on it. Normally it has to come from Binance for me to say I don't trust the charts, but I don't trust the charts on this, on Meta. This would be the one saving, let's say the one save that you could draw this onto this level, and you could say, okay, great, go ahead and shoot for the moon on this. We all agree, Agreed? Agreed. Now, anyone who doesn't watch or isn't a part of our group, they'll have no idea. That's the one save feature. I don't even like the level of lack of interaction at this level. There are just things I don't like about this. And again, I don't even trust the charts on this. For whoever it wants to come from or however it winds up on my desk this way, I don't trust the charts on it. It's not a conspiracy theory. It's not anything else. We've had tons of charts that just don't make sense. This would be, if I'm going to give credit to it, the best pattern framework to look at meta. And the best reason to have a 70+% probability to the upside. It's not going to take that much of my attention. So I have to speak out to on meta because the fact is, I mentioned that in the back. I've mentioned it to you guys. It's a Mach 5 train that's left the station. Boom. And continues. Hit a nice level of support today. If we wanted to talk about it technically, if you guys want to trade it, I placed this with a rough equivalent level of support drawdown here. These are not bad to trade, clearly. It's just not going to be something I'm personally going to take time on. So, but while we cover that, back to the issue, and we're about, I wanted to stream for like 30 minutes or something. It looks like we're 26 minutes into it. That's fine. Hope you guys are doing well, huh? And appreciate, it doesn't go without saying, appreciate these, right? Big time. Just appreciate them for what it is, for the number of trades that we've engaged in that look like this with a recouped level of resistance. If it's meta, if it's, it makes me sick. I just don't like it. I don't like Facebook, guys. I'm not big. I just don't like it. I don't use it. I never really used it. I don't like it. So I look at a car like Tesla and how ripping badass they are. Plaid, Tesla, and incredible engineering to like save lives when they crash, to hammer down with acceleration in almost every model, and to be like produced all over the world and respected as like a cool, like, you know, planet saving project. And then I look at Facebook, like, do what? Like, I'm going to spend my time trading something that, you know, I don't even like the comparative on it. So that's me, guys. Look at Microsoft. Look at these other things. Look at Bitcoin. We like Bitcoin. So back to the discussion. It's making money though. So I covered the technicals. If you guys want to trade it. That's cool. Trades on BTCC. We trade on BTCC because if we have problems with BTCC, they're going to ask me, London, did they lose any money because of this problem? Okay. So that's why we trade with BTCC. All right. Off to the wolves with wherever else you guys decide to trade. Is it a perfect exchange? No. But the question I get is, London, do they lose any money on the trade? Why? To reimburse, or is there a problem of that nature? Then they will take care of it at that level. I don't get that from other exchanges at all. So, and it's not for you guys. I respect the exchange a lot. So, let's go back to the issue today and what I just wanted to cover with you as we got a surprise on GDP. And I guess I just passed out, honestly. I was up at like 2 or 3. I've been getting up at like 2 or 3 and doing some work here and there on charts or whatnot. But as we look at what surprise we got, and again, we will even differentiate something like Meta from the fact that on Bitcoin, we are in this, and you know, do we want to compare to this? Do we want to compare out into a standardized bump and run here, right? Is this the same pattern that we could have just expected a return to this level of resistance? This is folded over well into the conversation. In terms of directionality now, needs to be a different discussion, doesn't it? Directionality, how this pattern trades, the bump and run, it needs to be a different discussion than exposure. And I'll get back to it. Thanks for letting me digress a few minutes here. We'll cover some issues that we would cover in the back. Your primary levels of entry, okay? Your, I hope, heavier levels of entry. The lower you go, the more primary pattern that you're looking at. If I'm saying this is a once in a year, maybe once every 2 years type of a pattern, if you can step up your level of participation and get a carry trade that's heavier, then When we have the discount, and if you didn't do that and you're looking at the market right now, like, well, that's one great thing to say it, but I keep missing the lows. Do you have any participation at the lower level? Is that participation at the lower level, is it increasing? Is your participatory level, at the lower prices, does it increase as price goes down? Do you have that standardized in terms of your participation? You know how to. If you're not, you're choosing not to. If you dismiss with this entirely and say, forget it, London, I just want to continue to trade. I trade, if it's 1,000 or 5,000 or 50,000 or 5 million, doesn't matter, okay? I'm just going to trade $5 to $5 million on every single trade. That's it. I don't want to carry trade. I don't want to go to bed at night. I don't want to have to worry about it. No problem, okay? I want to be able to sleep at night. No problem. I want to turn my computer on. I want to trade 5 minutes. I want to trade 10 minutes, maybe an hour, and I'm out. That's it. No problem. Cool. I see phenomenal amounts of wealth created from lower, larger entries. Okay? I do see wealth created from lower, larger entries. That doesn't mean that you have to trade like that. Okay? It's just a fact that that's what I see. Okay? A lot of trades have gone very well, right? IRS stuff, huh? They've gone so well, it's IRS level. It's impressive, right? I'm sure. Isn't that great? IRS level. Huh? Ooh. So, American dream is, man, I traded so well, it's actually going to affect whether or not I interface with the IRS. Hey. All right, so the issues. That's a joke, huh? So as we look at this componentry, as you look at, because and today on Tesla, we missed it. I didn't care. I woke up and boom, and I just knocked out. I've been up at like 2 and 3 in the morning, like, too many nights, and just boom. Charts, they get me, right? That's crypto for us. But as I know that I've told you that, just suggested, and not told you, but I have informed, I think everyone, recommending that your carry trade amount, and you guys you'll all agree, between our Fire and Ice, and if you didn't catch the bottom, Fire and Ice with some level of exposure, no big deal. If you were to just look at some sort of basic level, let's just look at a basic level Fibonacci into now these were 20 moving averages, they were Fibonacci's, they were 20 moving averages. So between the Fire and Ice, let's say between Fire and Ice, retracements, and 20 moving averages or Bollinger Band primary features, we caught almost every one of these. You can look back at it. You guys know this. We've had multiple opportunities to hammer in at some level, right? And on a few instances on some other coins where you had just a flat out fire sale, right? With some exposure, and not easy to catch, but with some level of exposure. If we were to change the formula a little bit better for you to consider what's a primary entry, or where should I go a little bit heavier, would it be on let's say a level that is a larger time frame and or a range consideration, macro range consideration, primary Fibonacci, right? Which is going to line up with your Fire and Ice on your higher time frames to an extent. Your fibs can push, your 20 moving averages can push. We use 20 because it's the middle of the Bollinger Band, and that's institutionally accepted. A lot of guys trade that. It's not the only moving average. So retracements can push, 20 moving averages can push, and Fire and Ice can push. Fire and Ice caught the exact bottom on Bitcoin on the green buy line. Yes, we have the fire sale line, right? It would have been nice to get the fire sale. We didn't. We beat the probabilities. It beat the probabilities. And you all know that some of the best moves, and this is a difficult part of a bull market, some of the best moves in the market beat the probabilities in a bull run, right? You never want to be on the wrong side of it. You don't want to be caught just turning into, this is and I've tried not to, maybe this is kind of a compensation that I've done with you guys, I've tried not to flip and go really bearish on anything. You guys, you know that. And not just now, but I've been watching the pundits and everyone else saying, "Oh, we're just going down. We're going," and you got Mach 5 jet planes rolling through from Nvidia to Meta to Tesla to and Mach 5 Tesla it did well. Nvidia Mach 5 period. Right? Meta Mach 5 guys. If you're looking for something to trade, I don't bring it up lightly now because we're off into the races with it. But as we talk about the following, you're going to follow in one of two categories. Let's make this relevant for you, okay? If you have an underlying position in whatever you're trading, and I'm talking about a big underlying position, it's like, no, I'm already up. I'm up, 2 million, or I'm up 2,000. Doesn't matter. Relatively speaking, a larger underlying position. What I would recommend. This is what I recommend. If you want to do it the other way, I think it'd be great. And please tell me how it goes. But when I woke up from a quick nap today, when the market GDP figures hit and we cruised to the downside on Tesla through some targets that we had, I wasn't worried at all. I wasn't worried. And I don't just do this so I can sleep well at night. But on Tesla was a great example of the fact that our primary entry on Tesla, and I went over the video earlier on, right? A primary entry on Tesla is, let's see what we got here. Primary entry on Tesla was this bull flag. Now, what I brought up for discussion. If you don't want to do it, don't do it. But do you know how much better it is? How much better you are going to operate when your heavier entry is at this bull flag? Big time. If you can get a bull flag, where do we like to get in a bull flag? Boom, underneath, guys. Underneath in the pattern. When we identify these, you need to go attack mode on these patterns, getting into the lower. Guys, getting as much exposure as you can in a bullish pattern like this is key. Now, the result is if you've got a larger underlying position, okay, if you can take that and ride that up, then the next step, if you can, I'll just tell you, if you can lock in your profits, beautiful. If you can lock in your profits, beautiful, okay? If you don't know how to do that and you're VIP, you need to get with me, period. There's a button you can literally push. You know how few people know this? There's a button you can push to lock your profits in. Beautiful. You guys haven't heard me shut up about that in the back a few days, huh? I have to get that information out. Now, the issue as you look at your primary entry, something like this, and I don't want you to trade them too heavily, but in an issue like this or an instance like this, I want you to have a larger underlying position. Why? Because when you're in the chop up along the top, yes, if you're in the chop up along the top, you can always refer to the specific underlying margin position and make sure, for heaven's sakes, you did not decide. And this is on Bitcoin, this is on Tesla, and Bitcoin, I'll just point to the primary patterns, etc. I want to say you put in 50 G's. Let's just say you put in 50 G's down here. All right. Put 50,000%. That's good too. But let's say you put in, and I don't care, guys, if it's 50 G's, if it's $50, or if it's 5,000. Let's just say 5,000, okay? And you leverage this up, you get a nice position with either one of these, depending upon where you're at. But if you put in 50 grand a pop right here, I just want you to take a step back, please. If you are right now swinging and day trading in this zone with 100 grand a pop, you have got the equation completely wrong. And I'm bringing that up because it may have just been that you missed an underlying trade. No problem, it happens all the time. Force yourself to not try and make it up in the chop, because the chop will take it from you guys. It's a lower probability zone. We talked about Bitcoin, for instance. Just look at where Bitcoin is. Again, we're going to review this because I want you to understand the probability, guys, is not in your favor right now. You're supposed to make a rational decision on Bitcoin, looking at the following. You're supposed to come to a logical conclusion here with a level of resistance, level of support, broadening top formation, down and out on the lines on the daily. Okay, now, on the wicks, you're in a perfect pattern. You haven't even broken the level of support. Look at the lines. You're down and out below the level of support, reconfirms of resistance. On the wicks, completely different story. On the wicks, you have no problem. We haven't even really hammered, slightly bent through this level of support with the hit 1 and 2 into the 3 on Bitcoin. Okay? So this is not conducive to larger entries. And the point is the following. You'll see the market pay people off. It'll pay people who catch the primary trades or who hit the primary levels, be it a Fibonacci, we can just say fire and ice, our indicator, or fire and ice, or Fibonacci, fire and ice, or let's say a primary indicated 20 moving average or otherwise that we may choose to engage in, hopefully at a larger time frame level, right? Like 20 has been solid, right? And it's confluent with, you'll find the 20 is confluent with their 23.6 or 38.2 or 50 or golden pocket, right? Or 78.6. So let your primary patterns be your primary patterns. Let your patterns where you don't have, when you're looking at something and you can flip it up, you can flip open a page in the book, it's like, that's exactly what this is. This is a bull flag, we're in a bull market, let's get with it. If you identify one of those, try and get in underneath. And you guys know, I'm famous here locally with you for what? For pulling out a bull flag early to you guys and be like, here, you guys, here, put that paper on into there, right? Why? Because then I'll do the flagship. Let's all remember, this is, you guys have to know this, and if you're not in our group, I really don't care. And I can't care because we're going to preposition over you if you're not in our group. That's just it. Okay, so my group, our group, the group gets the heads up on this type of a pattern in here, right? Yeah. Now this is Tesla breaking out here. Everybody else is going to get the, hey, we're breaking out of a Tesla. Hey, don't be overexposed. Hey, whereas in the back, when we identify this on that green line, yeah, well below it's, you know, we got something to charge into. So, and because these can be catchy on breakout. You guys know that. I bring that up because the whole notion of today is recognize when you're in a unique, beautiful, well-tailored opportunity to really create some cash. When you're in that opportunity, you'll do better when those moves are relatively heavier. And it doesn't, we'll sum it up with this. It doesn't even have to be heavy in terms of your whole account or in terms of a majority or a big percentage. It doesn't have to be like that. But if you're looking to make money consistently, it is going to, if you're operating with larger trades and trades are producing money for you, like trades that you're holding into a trade for a while now and it's really, you're looking at, one thing, well, I'm a profitable trader. Like, oh, you made, let's say $250, last week. That's fantastic. If you're a profitable trader and you made $2.5 million last week, hey, I've dealt with the 25 bucks and the 2.5 mil, okay? More than 2.5 mil in our group, personally, et cetera. You guys know it's not about the, you need to go fight Iron Mike Tyson, there's Prime, get ready, put your gloves on, get in there and knock him out. No one's asked to do anything like that in the market. When I say relatively heavier, capture the following. Capture the notion. And we're going to just discuss this quickly because we went through it on Tesla, but what's the benefit on Tesla today? And why would we talk about it? Because we were stacked with orders on Tesla, okay? Stacked with orders on Tesla. I knocked out, I was tired. Just haven't been up at 2 or 3 for like however many nights in a row. Okay, looking at the issue here, I woke up and boom. We had all these specific, and understand where the relevance comes in here. We had a GDP number that flew through the roof, and all of a sudden the good news is bad news, right? Which means the Fed may want to come in with, now there's, it's that notion that we get good news in, GDP, beat expectations, and now the Fed's going to want to slow down the economy, and we're going to have interest rates that are going to compete with our, with our assets in the stock market. So we'll get past all of those issues. As you know, CNBC is nice. I think you guys will like that as much as you'll like Bloomberg, by the way, if not more than Bloomberg. I'm more plugged into CNBC recently. So, but looking at this, what was the one save feature here? Just recognize it. If you got this wrong, if it ate you up and you didn't catch the move and you were just sitting there with orders and they were just stuck there, first thing I'm going to ask you, what was your level of exposure? Big time. What was your level of exposure relative to your underlying carry position? Right? Because these were targets for us. They were targets for us. I woke up from the nap I got into when it dropped down through, and literally it just wasn't. You have to understand how much better I feel having told you all, hey, by the way, on your upside trading positions, make sure that you're less than your carry position. It's very important. It's hugely important. Do not let these moves like this, and you're going to have stuff in your life, you're going to have stuff going on with your, everything, guys. You're going to have times when this could just drop, you missed the report, you've passed out, you'd been up all night, this and that, doing TA or otherwise. It's going to happen. Keep this rule together, boom. That this here, this is just the worst, guys. This would be the absolute worst. Can you imagine this move here costing you more than you made on this? You guys know that, but I see it, guys. I just see this. You know it can happen too. But I was just stacked with orders. I thought, no, guys. Look, if you lost more, and you can lose more from here to here than you made the whole way up here. Big time. You can lose more. Out of a bull flag, you can make less than you can lose from here to here. I promise. So looking at this framework, guys, 54% move to the upside. Nice move. And this was a drop of 5%. Yeah. So we can do the math. Put in, you guys, easily. Add a 0 to the other side. You're 50% up, you're 5% down. All you got to do is throw a 0 on this one, an extra 0 on this position here. Do the math. So when you haven't, and I'll just tell you, because I've mentioned it a few times, so we'll just talk about it. Keeping your flash cash trade, pop in and out, this and that, when you're operating in the chop, when you're up and over something, you should have a carry trade. Just try and have some discipline. Try and look at your underlying position and say, I'm not going heavier than that. Because that can absolutely, guys, I don't want you to go through that. And I woke up and I was fine with this because I've tried to make sure as much as possible, just keep this lighter than your margin position here. Just don't go net negative on something after an incredible move like this, right? And maybe you were watching live on Bloomberg and CNBC and you caught the move down and you shorted and everything's great. I know you guys are good enough to do that. I just don't want to see you chop up chop yourself up after some big gains. I want you to lock it in, and then I want you to tread lightly while the market's figuring out. Frankly, I want you to tread lightly and enjoy, and it's really like 100 rounds. You can still make some money. You'll find some good patterns. You'll find some good runners, like maybe it's NVIDIA, maybe it's whatever you may choose to. Maybe Taiwan Semiconductors got your eye a bit. Maybe Google, whatever you decide to trade. Solana is really a really great example because it provided the same pattern that Tesla did, right? And what's the idea here? What's the idea? You get involved here, right? Again, get involved here. If not right here on the fire sale, they're close something. If you're not in here, we identify this and we pull this structure up. Get in with it, guys. When you're up in here and you're throwing around cash, do not let yourself throw around cash in a chop zone here when you've got a situation, and it'll be the equivalent situation. And you're not supposed to know what direction it's going to go. Believe it or not. You're not supposed to know. It's literally a part of the market segment. It's part of the market opportunity for traders to not know where they're going. Buyer and ICE seems to do well during those times, but you guys, you know that. This is part of the market opportunity. Let's say for the people who missed this, we nailed this. Boom. Our target, bam, right? Range interval. Entirety of the range interval, dead on target hit, bam. Beautiful, beautifully well done. Entirety of the range macro situation, a primary target, bam, hit it, right? Lock your profits in. You want to chop around in here? You want to chop around? This zone is built to not communicate. Let's say to the extent that it's built to not communicate something clearly to the traders, is doing a perfect job, isn't it? Because you have an absolute technical conflict that you couldn't really design much better, right? You have an absolute technical conflict that you couldn't design much better. Look at the level of support again. Let's go through, let me go on the daily. Get on your daily chart. You see this pickup right here? Let's go through, let me see if I can do this. Let me see if this is the chart we were working on. Let me get back to Bitcoin if I can. There we go. Okay, 4 hourly. 4 hourly, 4 hourly it is. Off the daily, into the 4 hourly. Perfect, huh? It's gonna hide out in the 4 hourly. Primary time frame, right? That's the issue, huh? Not in the daily, not in the, to some extent, we're plugged in well enough to know every time frame, to have digested every piece of technical information, to be able to point out this huge inconsistency. It's great that you guys understand the fact that this is a mixed, it's perfectly crafted to not give you a straight up signal, right? In those zones, please try and make sure that you're less exposed in the market in those situations than you are in the primary pattern situations. Let's just make that distinction, because we really haven't in the past. And I think that's just really going to help you guys. And that's what helped me with Tesla today, with the patterns just raking down. I wake up like, at least I told them, like, do not outplay your underlying margin trade. I don't care if it's low. Me personally, I don't care if it's low. I know, but I only put like, I only put like 5 G's or 50 G's, or I only put $500 in at the breakout of the flag. Man, good. Limit your exposure to the upside. Lock and load this in the brain, guys. London, I know, but I only put $500 in the Tesla flag, and I only have a $500 carry position and margin. I got to trade and make more money than that. All right, well, limit your exposure to the upside, up and over the flag on Tesla. Limit it to your underlying margin position. So you only invested $500 here. Great, it made a lot of money, it did well. Cool. Do not let these inconsistent zones chew up 2 to 3 to 5 to 10 times what you made on this. Don't let it be an eyesore. You'll hate Tesla forever. When it has the opportunity to perform again like this, yeah, it's the wrong, I don't want to see you guys on that side of the equation, okay? So if it means that you're not trading heavily now and you want to because you need to make money, change the script. Change the script. Look for your next primary entry, right? Whether or not it be on a pattern, on a retracement, on a primary indicator like a 20 moving average or otherwise. And let's just stick with that formula, because it helps me rest better knowing that you guys have that in your mindset. So that was just in terms of level of exposure. We went through a few different things. I hope you guys are doing well. I hope you can capture how it's just miserable to be less involved. You can't do this to yourselves, guys. You can't be less involved in a pattern like this and afford to go heavier in these zones. Don't do it. Do not do it. You see the guys, hopefully not, who are wrong every other day up in here. I don't cut as many videos because the market's gonna make you wrong in a chop zone like this. It's like, who's gonna be right on this pattern on the 4 hourly time frame? Who is seriously going to be right or wrong on this pattern, right? Guys, you've got two different answers staring you in the face, and you want the right answer? There's not a right answer. There is not a right answer right here. Do you think there's a right answer? There's not. There's two answers. You have to choose between two potentially wrong answers. And there's, guys, two, I guess there's two right or wrong answers here. It's conflict. It's a technical conflict. You don't have the right decision staring you in the face. Recognize that. Trade appropriately. Do not compromise your profits that you have earned, guys, that you have built up and just knocked it out of the park. And I wouldn't be doing any kind of benefit to myself or the group or anyone. You'd think, oh, well, let's just trade. No, you make your money, bam, on your primary patterns, primary entries, your primary indicators at lower levels. On larger time frames, perfect, right? Yes. This garbage is garbage. Doesn't mean you can't pick up and make some cash and do great. No, but this is garbage. Technical garbage. I think we agree. And I'm just calling it like I see it. I mean, if you had these on opposing pages, look, if you had these on opposing pages in the New York Institute of Finance, one on the left being, well, this is a perfect broadening top formation for Bitcoin with, you guys know, it's funny, you don't see this on opposing pages of the New York Institute of Finance, do you? No, but it's a perfect level of support, perfect level of resistance. Copy that. But on the lines, we're down and out of a broadening top with downside targets. You don't see this. This is technical garbage. Don't get caught up in thinking that the road to success in day trading is trading technical garbage. There are approaches to it. We dig into the lower levels. We still look at targets to the upside, to the downside. And with that said, if I'm calling something out as being technical garbage, we still had good trades around it. Boom. Had a great drop here. You guys know that. It was beautiful. So don't get down in the dumps on Bitcoin or anything else. This was a nice drop. Boom. Right? We had a perfect, literally perfect, boom. Recouped a level of preceding support, a throwback or a pullback, right? We caught in perfectly as well to that bullish framework. Okay, the bullish framework here in terms of that, in terms of that bullish expanding volatility that I noted, that level of support hit perfectly. So this was a trade, boom. If you picked up right here and said, okay, I at least want a position on the support, at least want a position. I cannot divine an answer in the midst of technical garbage that is going to be any better than you need to limit your exposure, okay? You'll want the answer. The worst thing you can do is go and try and find the answer outside of a New York Institute of Finance book or otherwise. If you're in the midst of technical garbage, literal, technical, mixed signals, right? You need to limit your exposure and identify your preceding and potentially upcoming primary entries, primary patterns, primary indicators that are going to allow you to more heavily hit into the market than how you're hitting into the market right now. Yeah? Capiche? Just want to reinforce that with you guys so you do better in the markets. If you're underexposed in terms of your underlying carry positions, just wait. I promise the market will give you another opportunity to have a lower, heavier carry interest. I promise. It's the market. You'll get that opportunity. Okay, yeah. So refine this process within your trade game, and it's just important. I wanted to talk to you guys, and I want to stream. And you guys are awesome. You know that. Huh? So we got some technical garbage. We'll still trade it, but we're not going to trade the lights out of it, right? Good job, guys. Be in the back. Hope you're doing well. And macro range interval. We'd love to see 27.93. We'd love to see. You guys know this. I talk through these because they're primary entries. Yeah, and they'll line up with your fire and ice. Fire and ice is easy. Your fire sale's right on the your fire sale right now. Just so we know, fire sale is your 23.6. Your exact level of support right now on your expanding bell pattern formation is your green buy line. So you know you can that's fire and ice on Bitcoin right now. So we hit fire sale, it's a pickup. If we hit the green buy line on the 4 hourly, it's a technical pickup. Can the green buy line fail? Yes. Can you just trade your 4 hourly, trade the lights out of it? You're still going to get pushed around, and expect to get pushed around if you are trading too heavily, right? This weird thing happens when you just get involved too heavily into a position. You guys know this. It's like every move just wants to go, against me. When I throw $250,000 into a position, it's just falling off the bridge. You catch my money, it's falling off the bridge every time. So when you're respectful of your trade amount, when you're tying it into your primary indicators or patterns or otherwise, and your technicals reflect a logic that is cohesive and competent in the markets, and you've got a justification and rationale for your heavier entry and it's planned up and you're into it, that's when you start to see some nicer things go on in the market. It's very technologically advanced. You guys know that. So we will talk to you guys soon. Thanks for kind of a huddle tonight. We got to do a huddle. Hey. This is London with Bitcoin Spike VIP Trader. Hope you guys are doing well. Remember, we're just in the garbage zone. This was sweet. We're going to have some more sweet moves. You guys know that. This NVIDIA, I love it, huh? These graphics processors are so cool, guys. The notion that AI is not, I'll say this, it's either going to be a game changer level of revamp, heightened scale of kind of evolution, in terms of industry or intelligence or otherwise, is breaking the mold and framework of what's possible in terms of ingenuity and development. It's awesome, guys. If you haven't used AI, you don't know why these stocks are flying off the roof. If you've used AI, good gosh, you don't see, I don't see, and I've used it a lot, I don't see how AI doesn't just change everything. Literally. It's extremely competent, extraordinarily competent. It has the potential to change all of this stuff. Every company you see, it's worth digging into. So, if you're not in Hedgeroom, guys, you got to be in Hedgeroom. And I just want to say one more thing in terms of NVIDIA. I did say it earlier. It's the Mach 5, guys. It really is the Mach 5. We went through Meta for a minute, Sol, ADA, Doge. I'll throw some charts up for you guys in the back on anything that you want to look at there. Be aware on Solana that we've got this broadening formation here. It's not real sexy. We're not real keen on broadening formations generally, but we've got that on the 8 hourly. It's had some good volatility, and just be patient with the process and those heavy underlying positions, primary patterns, primary entry levels. Okay, know where you're headed into, and it's just such a great thing for us to be in this position to be able to talk about now, even if you do not have just seeing something you guys paying attention to is Bank of Japan with adjusting the yield curve, the yen slumping 1% versus the dollar. Interesting. See DXY didn't move much, but the yen slumped. Okay. This is great practicum. So don't feel bad if you're not more heavily exposed at the lower levels. Work this into your progress into our progress, guys, over the next 6-12 months. Give it 6 months and fix this. When you fix this problem, guys, when you fix your levels of exposure problem and you begin to master that, it's going to be nice. It's going to be great. It's going to be a good thing to watch you guys roll through. And it'll be, it's going to be exciting to be a part of that. I'll talk to you guys soon. Take care of yourselves. This is London with Bitcoin Spike and BIP Trader. Talk to you soon. Bye-bye.